Liebe Zuschauer, ganz herzlich willkommen vom Parkett der New York Stock Exchange zu Inside Wall Street. Ich bin Manuel Koch und bei mir ist Ben Willis of Albert Fried Company. Ben, thank you so much for joining us today.
Pleasure to be here. Thanks for having me.
We saw a crazy week again. We saw a pullback all of a sudden because of a tweet of the news agency AP. What's going on in this moment here on the floor?
I guess the takeaway is this market is very fragile. As strong as it appears to be as far as the bull market move, because we saw that dramatic sell-off, yet minutes later, we were right back on the plus side. I just think this market is tentative. It's just amazing to me that the extension of this bull run continues to go. It's been a bad trade to try and get in front of it, but that was a great example for anybody who wanted to know the impact of computers and their trading on Wall Street. That was a great one to look at.
So I was surprised. Computers are reading the news, they read the keywords, and then they react.
Absolutely, and they have been for years. And it's one of those things that's, I guess, a well-kept secret outside Main Street, because the news providers, like in the United States, the Dow Jones News Service, Reuters, AP, they all have a system that sends messages electronically through computers. We call it machine read only. So it's just a computer reading it, probably 250,000 words a second with a trading engine attached to it. So if the words are positive, they'll be buying it. In this case, they saw negative words, and actually what happened is the buyers left the market. So those that were trying to sell on the news sold to nobody. And once it was interpreted, they realized they had a problem. The markets reversed themselves and took it back. But this has been going on, and if you want to see really interesting is watch when our Fed speaks, they turn them off because they're very difficult to interpret what the Fed is saying, and that's done purposely.
Very interesting. In a moment like this, the guys here, the market makers, are losing money.
Yeah, they are, but we're one of the only markets, if not the only market left in the world where those trades that took place, the market makers on the floor of the New York Stock Exchange were here to buy it because they have to buy by law, by rule of the exchange. In order to be able to have this location down here, they tell the exchange, we will put our money at risk. When there's nothing but sellers, we'll stand there and buy it. They're not going to buy it all, but they're going to keep it in an orderly fashion, and that's the indication they knew there was a problem. But for that short period of time, all those people who are selling it, they were losing money. Now, obviously, it reversed itself. It turned out to be wrong, so that at least they got their money back, if not made a profit, which is what we want them to do. Because when they make profits, they make a better market. They are able to buy and sell more stock. That's a positive.
Let's have a look. We saw the GDP on Friday, 2.5% growth. I mean, it's much better than the last quarter, but it's not as much as expected.
It was well below expectation. The whispers were above 3%. And so in terms of missing by percentage, it was a significant miss. However, that wasn't enough to deter the markets from opening with some significant strength. You also had a good number coming out with consumer confidence, which is all important to the U.S. economy. So long as the consumer is confident, we know that the GDP eventually will catch up. But the fact of the matter is, the number when it was first released took the markets down in pre-market opening. But once again, the surprising strength of this bull market, by the time we opened, we saw the markets rally.
We still see the earnings season, big names, Apple, Amazon, Boeing, Zynga, Caterpillar, all of these names. What do you make out of the earnings season so far?
The important thing to keep an eye on is the revenue growth is not there. The top of the line where the money is coming in, the companies have been able to meet expectations by lowering their cost structure, which is a positive for management of a company. But generally that means more unemployed people, because the easiest way to reduce costs is to reduce your head count, which is why the unemployment rate is not moving. So it's kind of a catch-22. But the numbers themselves, as far as revenue growth, that's the real disappointment. And that's why I think that the market probably, once again, is teetering, trying to decide whether it should pull back or maintain this bull run.
When we talk about the unemployment rate, we are already in this week, and we will see the unemployment numbers on Friday. What do you expect?
I'm hoping to see a slightly positive number based on the weekly jobless claims, but again, we'll get an idea with the ADP number, which gets to hit first, which I think is a pretty good barometer. It doesn't align always with the American statistics, the Bureau of Labor statistics, but I think as far as a trend, it's a much better indicator than our own BLS numbers. It's a purer number, in my opinion.
Anything else you are watching this week?
No, I think the individual stock earnings will be important as far as the market of stocks are concerned. But the jobs number is the most important number in the world, so that's always the one we keep an eye on.
Also, we will see more numbers. Facebook will publishing numbers on Wednesday. I know you can't comment that, but what do you expect in general the next weeks?
Well, Facebook will have an impact only because, first of all, its impact to the general psychology of the market, because it's a heavily retail issued stock, and we know that when the stock dips, they see buy interest from the retail side of the equation, which is that's what this market has been seeing. As much as the professionals are looking for a sell-off, there's money on the sideline from the individual investor that's willing to buy. So my concern is that on Friday, Facebook traded higher on some upgrades. They're raising the bar of expectation. So generally with an earnings call, if it's anywhere near negative, it will turn lower, just if not more dramatically.
And last question, as always, the Dow Jones in the end of the week, lower or higher?
Wow. I wanted to see it lower, but right now, if the things continue the way they are, it will be higher.
Ben Willis of Albert Fried Company, thank you so much. I appreciate your time. Und Ihnen, liebe Zuschauer, danke fürs Zuschauen. Bis bald hier vom Parkett der New York Stock Exchange.